The front page of the Australian RBA charts new growth path. The Reserve Bank has slashed the official interest rate to a low of 0.75% and signalled it is prepared to make further cuts, charting new ground in monetary policy in a bid to revive household spending, boost wages growth and drive unemployment. Now, guys, we'll also have a quick look at the telly. And the headline there is Con Banks, CBA and NAB gouge millions in rates rip-off. The Commonwealth Bank and NAB were under heavy fire last night for gouging homeowners and savers by failing to pass on the RBA's 0.25 basis point cut to the cash rate in full. And, of course, if we go to the front of the Courier Mail, we have the same theme. You've been Scrooged. Banks cash in as homeowners denied rate cuts. The big banks were under fire last night after refusing to pass on the RBA's full rate cut. In another blow to households, it can be revealed state-owned energy companies' profits surged $333 million. We'll get to that in a second. All right, Kel, your thoughts? OK, well, Gleeso, there are two things here. The first is whether the RBA's move is a good move or a bad move. And there are a whole bunch of people, particularly on the left of politics, who are saying, oh, panic, panic, this is really dreadful. Can you remember, Gleeso, when John Howard went to an election promising we will keep interest rates low? So low interest rates are not necessarily bad. I know it's falling below 1%, but remember, after the subprime housing collapse in America and the collapse of Goldman Sachs, in the end, the Fed in America got down to 0%. It can actually, the official national cash rate can go that low. So maybe 0.75 is not, and they will probably go the economy side to 0.5 by next year. So the only people for whom that's going to be bad are people who are depending on savings, but it doesn't even have to be bad for them. I mean, for them what it means is you don't keep your savings as cash in the bank because you won't get good interest rates. But there's 6 or 7 other things you can do with it, and you can get better returns elsewhere, so they don't have to be in trouble. For people who are borrowing money, it's good. For stimulating the economy, it seems to me to be good. So I'm sorry, I can't see this as gloom, doom and despair when the rates fall this low. What the big banks are doing...
Well, I guess the...
Sorry, Gleeso, go on.
That's the thing, isn't it? No, that's what I was going to say, mate. The problem here is that the banks, you know, the duplicitous, unctuous banks, tend to hang on to a lot of what's been passed on through the RBA.
I don't remember there being a Royal Commission. Did they say bad things about us, did they? I mean, this is astonishing short-term memory. They were pilloried for the way they ripped off their customers, and their response to being pilloried for ripping off their customers, I know what we'll do. We'll fix all that. We'll get a better image. We'll rip off our customers again. It's just astonishing. Now, the CBA said they're going to pay about half the cut, so instead of 0.25, it'll be 0.13, and I think the NAB's going 0.15. But as long as they can afford to pass it on. We notice how big their profits are every year. They can afford to pass on the whole of this cut. The fact that they're not means they don't care what we think about them. They've said to themselves, we're the big 4 banks, they don't have any other choice, they're stuck with us, therefore we can rip them off and there's nothing they can do about it. I don't understand that mentality, do you?
No, I don't understand
Peter,
it at all. Colin, what are your thoughts?
Yeah, look, Peter, it's funny, you know, all this has happened today. Not every front page is all about these cuts. And, you know, the fact that the NAB and the COM are only going to send back half of it. I mean, it's been quite clear for a long time that the banks are really a law unto their own and they'll do whatever they want. I mean, my advice to people is that, you know, you go and shop around and you look elsewhere. I mean, matter of fact, Gleeso, I've got to be honest, I did that today. I went into my bank and asked them to drop my rate on my home loan. So, look, that's what you have to do.
And what they
did
say,
drop
Colin,
it down a bit, but nowhere near as much as I would like to have them done.
Well, I think we're on the cusp of, you know, interest rates starting with a 2. And I'm talking about variables, not fixed. So, look, I agree with you, Kel. I think there's a lot of doom and gloom around, unjustifiably. This is a big boost for homeowners. Homeowners are going to take plenty of benefit from cashed-up investors who are looking to get into the property market. We've seen a rebound in the Melbourne and Sydney markets in the last
3 to 4 months. And, you know, I think we just got to get used to the fact that interest rates are going to be low for a sustained amount of time. And, of course, you have to adjust. That means that if you want to put investment into banks on fixed deposits, you're going to have to take very, very small gains. And maybe there are other options like, you know, the third at Randwick on a Saturday.